Welcome to Pro News Weekly. Let's check out the latest news on the financial markets. The dollar has risen from the ashes. Stock indices have strayed from their path. Gold is looking down, and Bitcoin is bored. The USD index has managed to find its footing. The dollar has gone on the counterattack thanks to U.S. successes in trade deals, the strength of the economy, and the Fed's reluctance to signal a rate cut. The White House does not require its partners to pay tariffs and is obliging them to invest money in the U.S. economy. The combined investment volume of Japan and the EU is expected to exceed $1 trillion. Coupled with fiscal stimulus of $3.4 trillion, this gives hope for GDP acceleration. U.S. gross domestic product expanded by 3% in the second quarter. The stability of the economy and the labor market allows the Fed to keep rates high. The central bank is not bothered by pressure from the White House and the presence of two dissenters on the FOMC, not seen since 1993. Donald Trump said he had heard about a reduction in the federal funds rate in September. However, on the contrary, the futures market reduced the probability of monetary policy easing at the next Fed meeting from 65% to 45%. This led to a strengthening of the U.S. dollar. The USD index is likely to continue its rally, provided that the U.S. labor market statistics for July do not interfere. The S&P 500 retreated from record highs, frightened by the Fed's lack of hints about resuming the cycle of monetary expansion in September. Jerome Powell made it clear that lowering rates prematurely is a bad idea. Accelerating inflation will lead to higher borrowing costs, which is ineffective. As a result, the central bank's passivity outweighed the bullish factors. Trading deals are being concluded en masse ahead of the 1st of August. South Korea has become the White House's latest victim. The U.S. has imposed a 15% tariff and demanded investments of $350 billion and purchases of American energy products worth $100 billion. S&P 500 companies continue to relish in positive corporate reporting. Meta Platforms and Microsoft have announced increased spending on artificial intelligence technology. However, the onset of a seasonally weak period for U.S. stocks is holding back buyers. Over the past 10 years, the broad stock index has risen only 5 times in August. The S&P 500's reluctance to continue its rally in response to good news is an alarming sign. Perhaps most of the positive news has already been factored into the quotes, opening the door for a correction. The strengthening of the U.S. dollar and the rise in U.S. Treasury bond yields have been headwinds for gold. Prices have fallen to the lower end of the medium-term consolidation range of $3,250 to $3,400 per troy ounce. The outflow of capital from Chinese ETFs, despite the truce between the U.S. and Beijing, added fuel to the fire. Nevertheless, gold is trying to find its footing thanks to the collapse of other assets in the precious metals sector. The overflow of capital into the platinum, palladium, and silver markets forced gold to trade in a narrow range. The return of money against the backdrop of yesterday's collapse helped gold. Its correction does not bother the bulls in the least. According to Fidelity International, the precious metal will be able to reach $4,000 per ounce. Central banks' appetite for buying bullion is not waning. Sooner or later, the Fed will ease its monetary policy, and the U.S. economy will cool down. Tariffs are taxes on American consumers. As history shows, they have never led to anything good. However, while gold still has a chance to recover in the medium term, its short-term prospects look bearish. Bitcoin has been stuck in the $116,000 to $120,000 trading range for the 3rd week in a row. The bears' attempt to break through the lower limit against the background of a strengthening U.S. dollar and a falling S&P 500 has failed. Shortly after, quotes returned to their original positions. Cryptocurrency needs fresh drivers. The active introduction of stablecoins into everyday life has not yet given a boost to Bitcoin quotes. About 160 public companies following Michael Saylor's strategy have accumulated about 300,000 Bitcoins. They're trying to monetize their reserves by lending or pledging tokens and issuing derivative securities. Meanwhile, in Europe, the Euro-AU stablecoin was launched for the first time on the Ethereum blockchain. According to the issuer, the stablecoin fully complies with the EU's regulatory framework for crypto assets. Without fresh drivers, it will be difficult for Bitcoin to break out of the 116,000 to 120,000 consolidation range. A correction in U.S. stock indices could trigger Bitcoin sales. The associated deterioration in global risk appetite will be a blow to digital assets. Data on the U.S. and Chinese trade balances will show how effective Donald Trump's restructuring of the international trade system has been. Final figures on European business activity and statistics from American purchasing managers will demonstrate the resilience of economies to tariffs. Particular attention will be paid to the Bank of England meeting. Will it want to lower the repo rate or extend the pause in the monetary expansion cycle? The British economy is not yet falling off a cliff, and inflation is high. Perhaps Andrew Bailey and his colleagues will not rush into anything. The economic calendar for the first full week of August is hardly busy. Numerous trade deals point to a de-escalation of the conflict. However, the stubbornness of Mexico, Canada, and Brazil may anger Donald Trump and dampen global risk appetite. Markets will closely monitor developments regarding the possible imposition of U.S. sanctions against Russia and secondary tariffs against countries that buy oil from it. This could seriously affect the commodity market situation. Follow the updates on global markets in Pro News Weekly. Like, share, and subscribe.